Welcome to the 15-Minute Financial Feast podcast, bringing you 15-minute segments to help you retire with purpose on time. We're serving up food for thought and bread for the head. Are you hungry to learn? Here are your hosts, Mark Triplett and Troy Westendorf.
Hey everyone, welcome to this episode of the 15-Minute Financial Feast. I'm your host, Mark Triplett.
And I'm Troy Westendorf.
And this particular podcast, we're going to be talking about what are a few common financial professionals that you might run into through the course of your life. How are each generally compensated? And what are the pros and cons of the compensation arrangements, namely conflicts of interest that you should be aware of. And so we'll actually talk through, there are so many different types of financial professionals that you might run into. Different folks might have different things on their business cards and call themselves different things, but we're going to break it down to a handful of those that are most common that you're probably going to interact with at some point in your lifetime, and kind of show the highlights of both or all of them, as well as the things you should be paying attention to. So, Troy, why don't we start off with just common financial professionals that we as American citizens living our daily life are probably going to run into at some point?
Yeah, so the first one's insurance agent, and that's what I was when I got into this. Prudential Financial, my business card said agent. So what I did with Prudential, I could do life insurance and I could do the long-term care and some of that stuff, but I was considered to be an agent. So I was acting as an agent of Prudential Financial. So normally when you see that agent listed, they're working for a company, whether it's Prudential or Principal or whatever it may be. It's an agent of one company. They're independent versus captive. Generally I received a commission. So when I sold products with Prudential, I received a commission. Whatever I said for life insurance or whatever that was, there was a commission involved.
Let's just back up just for a moment too, to make sure that we address independent versus captive. So some insurance agents are allowed to contract with a multitude of different insurance companies.
Yes.
So those independent agents can independently contract with company ABC and company XYZ and you name it, and even different product lines. Property and casualty, health insurance, disability insurance, life insurance, annuities, et cetera.
Right.
Then there are captive agents who are only permitted to represent.
Was me. Captive.
They're only allowed to represent that one company's products that are available, and they're not allowed to go outside of that.
Yep.
And they'll offer products that are suitable for you, but they may not be the best in that case. And it's it's part of their employment arrangement with that captive insurance company. Yep. So oftentimes, though, today you'll run into independent insurance agents who are allowed to access pretty much just about any company's products that you can think of. Mm-hmm. And you'll know that because they'll be able to show you comparisons from a multitude. Like, for example, if you're buying life insurance, they'll be able to show you comparisons on all of these different insurance companies that they could represent, trying to find you the most economic benefit for you for the least amount of premium you pay. Now, the premiums you pay generally are how the insurance agent is compensated, whether it's property and casualty insurance premiums to protect your house or your automobile, or whether it's life insurance premiums to protect your family. They're paid a commission based off of a percentage of that premium, generally speaking. And that's pretty much how all independent agents are paid. And most captive, there may be some that are salary based that I don't know of, but generally speaking, they're
when I started Prudential, there was a salary, but you also got part of a commission on products. But that's why you were captive. I mean, you were selling their products, and you weren't to go outside of that arrangement.
So let's move on to the next one, which would be a commissioned registered representative, who in effect is an employee of a broker dealer. Now you'll run into these folks when they're selling their investment products. So they may be selling mutual funds or exchange traded funds or variable annuities, or a whole host of different investment products that are sold for a commission. They're acting as an employee of that broker dealer, selling the investment products of that broker dealer. And generally, they're going to receive a commission on the sale of those investments. And it could be an upfront commission, also known as a front-end load. Could also be some sort of trailing compensation as well, like 12B1 fees, or part of the 12B1 fees going to the broker selling the investment. All of the compensation from those investment companies is actually paid to the broker dealer, which is an entity, and then passed. Some of that compensation that is passed through to the commission broker selling the investments through what's called the grid of that broker dealer, or the compensation grid. So that's the relationship. And we'll talk about more of the pros and cons later with these, but that would be one type of relationship you're going to run into when you're dealing with investments.
And the next one, Mark, is an investment advisor representative. And I'll let you take care of that one, seeing as how you are an investment advisor.
So an investment advisor representative is a representative of a registered investment advisor. So oftentimes I think people think that a registered investment advisor is a person, but it's not. It's an entity. A registered investment advisor is an entity either registered with the state securities department or the federal SEC, depending on the size of the registered investment advisory firm. Then the representatives of those registered investment advisories are investment advisor representatives, which is, as you said, that's what I am. And our relationship that we have with folks then in that case is one of negotiated fees for services that we render. And those services could be investment management, could be financial planning, could be a whole host of different scopes of services, college planning, income planning, Social Security planning, all of these different things that we might do in the scope of our planning process. But that is outlined in a contract of what is expected of the investment advisor representative, what is expected of the registered investment advisory firm, and what is expected in terms of compensation paid for those services that's outlined in that contract. In that relationship, we don't receive compensation when an investment, such as a stock, bond, mutual fund, et cetera, is bought or sold. We still do that for folks, but we don't actually receive a compensation. So our investment team, when they buy or sell a position inside of a particular strategy that we're managing for clients in that strategy, aren't receiving any compensation for that. They're gonna generally, we would ask folks to kind of think through that. If one of our investment team members was going to make a change in one of the strategies, one of the maybe sell an investment and move to cash, or buy a different investment with cash on hand, and we know that they're not getting paid a commission to do so, why would you think they might be doing that? Right. Well, the obvious answer is they feel like it is in the best interest of the folks who are in that strategy, so that's what they're going to do. Anyway, investment advisors.
Before we start, that comes up a lot. What is a fiduciary? That comes along with that territory. And it's often asked when clients come in, even for our discovery, they'll ask, is he a fiduciary? What is that? So
fiduciary is type of relationship where you're required by law to act in that person's best interest. So you're putting the client's best interest above all else, above the firm's, above your own personal gain, and you're required by law to do that, to act as a fiduciary. Now, you don't have to be a fiduciary necessarily to act in somebody's best interest. I know a lot of folks are insurance agents who I would trust that act in their client's best interest and always try to find the most economic benefit for them for the least amount of money. But a fiduciary is required to do so. So a fiduciary relationship would be an investment advisor, or like an attorney-client relationship. That's a fiduciary relationship, required by law to act in the best interest. I'd say, investment advisor representatives are usually paid in one or more than one way. Could be an hourly fee that you pay them for particular services that are on an hourly rate. It could be a flat fee Perhaps, for example, if you want somebody to do financial planning for you and draft a written financial plan, that investment advisor might charge a flat fee for that. Then oftentimes it's an ongoing fee based on the assets that are being managed. And we see that probably most common, where you have somebody who's charging a particular percentage, a fee based off of the account balance that they're managing, which can work in the client's interest as well as the advisor and advisory firm's interest, because as their accounts grow, the fee grows. If the accounts don't do well because they made bad decisions or the market's down, that means that the compensation to the advisor goes down as well. So we're kind of on the same side of the table there with a client in that perspective. So let's talk about some of the pros and cons of each type of relationship. Let's start with the insurance agent.
Yeah, so the insurance agents protect your family, property, business. The conflicts of interest on this one, Mark, would be just what you talked about. The opposite of the investment advisor and the fiduciary is they're actually getting commissions. So when I sell or if I go into an account and sell something and buy something else, it's actually generating commission. So while that shouldn't sway person to do one or the other, it kind of gets in the way when you're talking about, if I sell this and buy this, I get a commission. So that's one of the conflicts. The other one is the captive agent, and I go back to when I was with Prudential. There are some times that I would like to have went out and got a different product that was a better fit for the client, and I could not. So you basically have to find something inside of that that's a close fit or maybe will work. And that's what you have to work with. So that can be a conflict as well, because you don't want to say, well, send the client off to somewhere else to get the product that you'd like to sell them. So there's a big conflict there, I think.
Yeah. So the role, the pros of an insurance agent is if you need to protect your family with life insurance, or you need to protect your health with health insurance, or you need to protect your home, from fire with property and casualty, your automobile, there's a role to be played there. And that insurance agent is fulfilling a pretty specific role and can do that quite well for you, particularly if you're working with somebody who has access to a whole host of different products that they can really go out and look and find the most economic benefit for you and your family for the least amount of premium out of pocket, as well, as long as they're willing to do so. That's a positive relationship.
Right.
But that commission and that transactional nature of that relationship often means that there's a conflict there, and it has to be addressed. And I know some insurance agents that are really good at addressing that conflict of interest, and tabling that and putting that aside and looking for products that are going to be the best fit for their clients' specific needs, and to really try to put their interests, their own financial gain to the side when they're making those decisions. But it is a transactional relationship. So being transactional, for them to continue to feed their family, they have to find another transaction, right? They have to go out and find a new client to sell insurance to, or an annuity to, or something like that. So you may not find that you have the same ongoing service relationship with that individual because they have to go out and find somebody else to sell something to, or you have to buy something else from them to compensate them. Right.
Exactly.
And there are some laws in place to protect that sale and replacement of insurance. It's called churning, and it's illegal. And so there are laws to protect from insurance agents that are doing nefarious acts. And most insurance agents are out there trying to do the best they can for their clients. I do believe that. But like with any industry, there's some bad actors that give them a bad name. Right. Let's talk about commission brokers real quick, and I'll just briefly cover this because there's a lot of similarities there. There's the pros there. If you just want to buy or sell a particular investment, or you just want to have that transactional relationship with that investment professional who is fulfilling that role of helping you acquire a particular investment or a basket of investments, they're going to get compensated a commission one time for that. Could be receiving some sort of ongoing trail fees or something like that if the particular investment has trail fees. But generally speaking, it's a very transactional relationship. So with that, there's conflict, right? They are going to try their best to recommend a a financial investment that is going to be good for you. And there's some rules in place to require them to try to navigate those conflicts of interest, but they're going to get paid a commission, and they only get paid when there's a transaction there, exactly. Generally speaking, so that they're going to find new people to sell investments to. If you want to buy more investments, you'll probably get their attention. Yep. If you don't want to buy new investments from them, you might find that commission broker doesn't communicate with you all that often.
Right.
And we hear that a lot actually from folks who have an investment professional they're working with, and they're like, oh, I haven't heard from them in 2 years. Well, have you wanted to buy some more investments recently? Right. If you did and made it known, they probably would talk to you.
They'd be calm.
So it's a very transactional relationship, generally speaking, when you're working with a commission broker or registered representative of a broker dealer. Now, an investment advisor representative, you're going to be paying fees, oftentimes ongoing fees for services that you want, specifically stated in the contract. Yep. Like you are engaging because there's a relationship that you want there, and there are certain services that you expect, and you want that ongoing communication. And for that, you're going to pay fees as opposed to a one-time transactional compensation. Some of the conflicts of interest, and I would state that investment advisors and registered investment advisory firms strive to avoid all conflicts of interest. It's part of the fiduciary relationship, but there are conflicts in every situation where compensation is exchanged for any product or service. Yep. Just throw that down. Some investment advisors might be reluctant to make recommendations for a financial product or an recommended action to a client that could potentially reduce the assets that they're billing on.
Yeah, the assets under management.
Yeah. And I've witnessed this time and again in our industry where an investment advisor would avoid recommending maybe an insurance product that would actually improve that client's financial outcome or eliminate a glaring risk in that client's financial life, because they're going to have to pay for it. And if they're going to have to pay for it, that insurance product with a premium, where's that money going to come from? It's going to come from the billable assets of the investment advisor. So there's a conflict there for them to make that recommendation. Or a client might say, I'm thinking about buying a new car, an RV, or I want to pay my house off. I have cash to do that. Yeah. And maybe it's in the client's best interest to do it. Maybe it's not, but they want to. And there may be some reluctancy from the investment advisor to say, yeah, let's take out $50,000 of the assets I'm managing that I'm currently billing you on and pay off your house or
that one's come
buy
up
that
several
RV.
Times.
So there are conflicts of interest with each one of these types of financial relationships. I think it's important to understand how different financial professionals operate, the services and the products they provide, and how they're compensated, so that you can kind of look out for those conflicts of interest yourself and know what questions to ask when you're engaging with a financial professional. Exactly. And last but not least, there are some financial professionals that are, they're multiple. Or what am I trying to say? They're licensed. They could be an insurance agent who's also an investment advisor, or they could be a commission broker who's also an investment advisor. We see that duly registered, a commission broker or a broker dealer who is also an investment advisor, which I always question that a little bit. Like, how do you decide which hat you're going to wear that day when you wake up? Am I a commission broker selling investments, or I'm an investment advisor operating in a fee-based capacity with my client? And so that's kind of always been a little odd one for me. But just understand that you could be working with a financial professional that is all three: a commission broker, an insurance agent who's captive or quasi-captive, required to sell insurance products for that particular company, and be an investment advisor. Go figure. Isn't that wild? Right. But understand how insurance insurance agents, registered representatives from a broker dealer, and investment advisors operate and are compensated, and that'll help you navigate some of those conflicts of interest. Now, maybe another topic for another time will be just conflict-free advice. There's an article on that on our website. titled "Does Conflict-Free Advice Exist?" And you can see that on our website at Triplett-Westendorf.com underneath the Education Center and the articles there. But that might be a good one to follow up on, where we just hit on the conflicts that occur and how to navigate those.
Absolutely.
All right. Anything to add?
I don't think so. That was good. I like the just kind of breaking down the insurance agent, the broker, the registered investment advisor. It gives you a lot to think about on when you're meeting with these people, kind of how to determine your questions, what to ask, what to look for. And I would say, for one thing, stick to your guns. If there's something that you really want to do and you're being advised not to do it, make sure that the investment advice matches up with what you're wanting. Because you talked about last one. I just had a client last week talk about this. Wants to pay off the house. The advisor was not really on board with that. And it goes back to that conflict of interest. If you feel like you're going to have a peace of mind by paying off your house, then if you can do it, then you should do it.
Well said. So that's all for this week's show. The next topic that we have, I think we'll probably roll with that just conflict-free advice question.
Yeah.
I think that's important. You can find out more about this topic or others by visiting our website at www.triplett-westendorf.com. You can find out more about our financial planning philosophy and our process at www.mypt5.com. That's MYPT, the number 5.com. And until next time, make sure that you're going out there and doing everything you can to retire with purpose and on time. Every dollar has a purpose.
Every dollar has a timeline.
Until next time, I'm your host, Mark Triplett.
Troy Westendorf.
You've been listening to the 15-Minute Financial Feast podcast. Remember, every dollar has a purpose and every dollar has a timeline. If you have questions about today's topic, schedule a call with a team member. Visit www.mypt5.com. Until next time, be sure you're taking steps to retire with purpose on time. Mark Triplett is an investment advisor representative of and advisory services offered through Royal Fund Management, LLC, an SEC-registered investment advisor. Nothing contained in this program should be considered an offer to buy or sell securities. Different investments have different risks associated with them, and not all investments are appropriate for all investors.